And so if you try and sneak around and get around things, it's gonna come out and it can cause problems. As an active mortgage broker with over 20 years of experience, I've seen it all. And there are things that I continue to see all the time that are huge mistakes that buyers and people that own homes already that want to refinance, these mistakes that they make, they end up costing them lots and lots of money. It causes them problems in the loan process, gives them stress, anxiety, and just creates a bad experience overall. So let's go ahead and dive into the 5 biggest mistakes people make when applying for a home loan. Now, do me a huge favor, make sure to hit the like button and subscribe to the channel so you get more videos like this. The first thing being, they don't shop around. Most people go with the first quote that they get. And there's a lot of reasons why you don't want to do this. For one, you're most likely going to end up paying a much higher interest rate. You're going to pay higher fees than what you would have paid if you would have shopped around a little bit to see what other options are. In addition to that, if you don't look around, you're not going to be exposed to all the different loan products that exist. And so if you don't look around a little bit, you might not get the right loan product, or maybe what I should say, the best solution for the home loan needs that you have. Now, when you're shopping around, another mistake that I see people make all the time is that they don't get a quote on the same day. Because here's the thing, guys, is that the market changes daily. Sometimes it changes 3-4 times a day in a very volatile environment. And so if you get a quote today, for instance, and then you get a quote from a different lender 2 days from now, and you get a quote from a different lender 4 days from now, well, maybe the quotes all look the same. But they're not, because the interest rates, the costs for those rates, the fees, they fluctuate. If you're not getting a quote on the same day as the other lenders, then you're not comparing apples to apples, and you may end up choosing a lender that you're actually paying more for, but you think that you're getting a better deal because for whatever reason, the day that they provided you the quote, the market was better than the day that some other lender provided you a quote on. And it just so happens that, it appears that the first lender was better, when in reality, if you would have shopped apples to apples on the same day, you would have seen that another lender would have been better priced. Now, another mistake that I see people make is that they don't shop or get a quote from a mortgage broker. You got to understand that a mortgage broker's business model is to basically do the shopping for you. They're not tied to one lender. Usually they have relationships with dozens and dozens of lenders, and they go out to the market to find the best deal for your scenario. In fact, a study was done that showed that working with a mortgage broker actually saved you on average of over $9,000 over the life of the loan, because you're going to get a lower interest rate, pay less fees by getting a loan from a mortgage broker. Shameless plug, New Way Mortgage is a mortgage broker, and we chose to be a broker because it's fast, it's easy, it's affordable. So let's move on to the next mistake that I see people making all the time. So they're getting all these quotes, but they don't understand the fees on the quotes. So they basically, all they're comparing is the interest rate. But here's the thing, guys, is that when you get a quote, another part of the equation is how much are the fees? What are the fees that the lenders are charging? A lot of times lenders will charge all sorts of little junk fees, like a processing fee, an admin fee, application fee, all sorts of little fees that they all add up, and they add up to the cost of doing business with them. So that's something that you need to compare from quote to quote. The other thing that you're going to need to look for is something that are called points or discount points. And basically 1 point equals 1% of your loan amount. And so what you'll see a lot of times is lenders will charge points to provide you with a lower interest rate than what you would get without those points. We get people all the time that reach out to us for second, third opinions because they've gotten quotes in other places. And it blows my mind every time I see some of these quotes that come in, a lot of times from direct lenders. They charge a whole bunch of fees in order to have an attractive interest rate, maybe a more attractive rate than they would be able to offer without all those additional fees. And so when you're looking for the best deal, it's not just about the rate. You got to factor in the fees that the lender's going to charge as well as those points, because it all adds up, guys. All right, so let's move on to the next thing. And this one really hits home for me because I literally just had it happen today with a client. And what I'm talking about, a mistake that a lot of people make when applying for a home loan, is that they hide things. They don't disclose everything. Look, we're gonna find everything out. I'm talking about financial stuff. I don't care about your, relationship past. We're talking about money, guys. And so when you're applying for a home loan, all the stuff that's on your credit, your income, your assets, it's all gonna come to light. And so if you try and sneak around and get around things, it's gonna come out and it can cause problems. Here's an example. When you apply for a loan, one of the questions that is asked of you is if you are delinquent on any federal debt, like IRS debt. And if you select no, well, they're gonna assume that you do not have any outstanding IRS debt. But let's say that you actually do, and you've been making payments. Well, the way that would work is it's gonna show up in your bank statements. So all of a sudden you provide us with your bank statements and we see that you're making monthly payments to the IRS. Well, we have to include that now in your debt to income ratio. And if you're already in escrow, this can be problematic. It can cause stress, right? And the goal is to provide a seamless transaction. So don't hide anything from your mortgage professional. They're gonna find out anyways, and it's better to be proactive, play offense, and not be playing defense when you're already too far into the transaction. You've already disclosed too much to the lender. Your loan officer, think of them as your attorney. You got to give them all the information. What they choose to share with the court, that's on them. Something else that I see happen a lot is that people, they go out and they get pre-qualified instead of being pre-approved. And then they end up finding me on YouTube or Google, and then they reach out and they're like, hey, I really, want you to do my loan. And I'm like, hey, great, I'd love to help you out. And they're like, hey, it's gonna be easy. I'm already pre-qualified. I've been pre-qualified for an $800,000 purchase, blah, 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 blah. I'm good to go. And I'm like, hey, great. I'm gonna have you go ahead and complete my application, send me your income and assets so that we can do a full pre-approval to make sure that we're not missing anything. Because at the end of the day, the last thing that you wanna have happen is that you write an offer to buy a property, your offer is accepted, and then you find out that you don't qualify for your loan. That can happen when you're pre-qualified. Getting pre-approved is completely different. Being pre-approved means that you've had a lender review your income, your assets, your credit, and that they have actually issued a conditional underwriting approval. And a pre-qualification, that's just basically where a loan officer hopefully is looking at your credit, your income, hopefully your assets and other things. Maybe they run your application through Fannie Mae's DU, but at the end of the day, they're not the ones that are making the lending decision, it's the underwriter. And so if you're only getting pre-qualified, you're potentially setting yourself up for challenges, especially if you have a challenging scenario. Maybe you got challenging credit. Maybe you've got very complicated income. You've got multiple sources of income, and the loan officer is not calculating your income accurately. And when your application gets to the lender and the underwriter reviews it all, it's a different story, and now you don't qualify. So make sure, get pre-approved. Don't get pre-qualified. Pre-approval is the way to go. All right, the last thing, and this is something I see happen a lot, and I get it. I mean, I'm kind of a cheap person myself, so I actually totally appreciate this, but I do see it as a pain point. And what happens is sometimes people, instead of picking the expert, they pick the company that's got the lowest interest rate. There's all sorts of different business models in this industry. And there's some business models where people that have very, very little experience at doing mortgages are the people that are the front lines that you are working with. It's usually call centers and retail lenders where you're working with an inexperienced loan officer. And the problem with that is that they haven't stepped in as many piles of S as somebody who is experienced has. And because of that, they don't know the problems that maybe exist in your application that they need to figure out how to circumvent. Loan officers are problem solvers. What they do is they look at your loan application, they review your income, your assets, your credit. They understand the guidelines. They know the rules of engagement, and their job is to come up with a strategy to get you across the finish line. So if the reason that you choose to work with somebody is because that they had the lowest interest rate, but maybe they're not the best tactician, they're not the expert, most likely you're gonna end up in a situation where you should have chose the person that knew what they were doing, especially when you're buying a house. Getting a refinance, that's a little bit easier. You got less cooks in the kitchen. There's not a timetable. There's not a close of escrow date that everybody's running to, the race to the finish line. So you got a little bit more breathing room. But if you're using a call center LO to get your purchase loan done, you better buckle your seatbelt up because you're gonna be in for a bumpy ride. So guys, I hope you found value in this. Like I said, I've been doing this for over 2 decades and I see stuff happen all the time where people cause problems for themselves that they could have avoided if they would have just done a little bit of due diligence. We'll see you on the next video. If you haven't already, make sure to hit that like button, subscribe to the channel. Thanks for watching.